Thank you, everyone. Welcome back. We hope you enjoyed lunch, the sandwiches that we provided. We'll now proceed on to our afternoon session. Once again, I welcome you all back for the afternoon. For those of us that are watching through our live streaming, our apologies, we went for a break and now we are back. So the afternoon part of the session will be on salary wage. Those of us in the audience, if you have not completed the survey, please do take time to complete the survey forms. Our officers are outside with the tablets and the laptop. So kisim feedback bla you pla. If you pla mamas, good pla. IRC can conduct more of this. If you pla no one below something when we pla can improve, only that survey form will indicate to us. So please take him time bla you pla lo completing these little survey forms. We had the breakout session just before or right after 10. We had personal income tax, small business tax, and corporate income tax. But I hope everyone is back together again now. We'll proceed on to our presenter, Terence. So Terence will be presenting on salary and wage. Terence, thank you. Move it and turn it on. Sorry.
Good afternoon, everyone. As our MC has mentioned, we will go through salary wages tax in this maybe the whole afternoon. When you hear about salary and wages tax, some of you seated here might be saying, I'm not in the formal employment. Salary wages tax does not affect me. Well, if you are running a business, everyone will be, they will all be involved because when you run a business, you need people to work for you. So you will pay them salary and wage. And you are obligated to deduct salary and wages tax. Even the companies, the big companies, well-established companies, in the course of their business, they pay salary wages to their employees. So in this next session, we will go through salary wages tax. What is salary and wage? What is salary and wages tax? How to calculate salary and wages tax? And then we will go to employer obligations and employee obligation. That will finish off our afternoon session. So without further ado, we will proceed on with the first presentation, which is on salary wages tax. Have you received the green copy of the updated salary and wages tax rate? Some in front are still without the form. So at the end of this session, the tax office, we anticipate that you will understand salary and wages and benefit tax, how salary and wages tax is calculated, group employers' obligation, and you as the employee, your obligation. Firstly, as I mentioned earlier, what is salary or wages? Salary or wages are remuneration of any kind or allowance paid in respect of an or relation to the employment of that person as an employee. Any remuneration by ways of fees or otherwise for professional services, such as an advisor, you work as an advisor, consultant, manager, or for any other personal services carried out in Papua New Guinea. And in the salary and wage, we have it is made up of allowances. So all allowances, as far as the tax office is concerned, they form part of the salary and wages. So we have overtime allowance, commission, bonus. If you have a good employer or your company is rising to another level, you will be giving school fee allowance to your employees, housing allowance, motor vehicle allowance, higher duty allowance when you are working above your normal position, shift allowance, domestic market allowance, or risk allowance. All these allowances, they form part of your salary and wage. And as far as the tax office is concerned, our salary and wages taxes are assessed on a fortnightly basis. So for non-salary wage earners. Salary and wages tax is determined by the nature of payment. When you are paid a salary or wage, a declaration form comes very, very handy. A dependence declaration may be lodged with only one employer at a time. I believe you have that form. It's called a S3 form. We will go through that in detail when we are going through the employee obligation. It is valid from the time of lodgement with the employer or approval by the IRC. The next time, or when you try to lodge another new declaration, it's when you have a change in your dependence. It's not an annual lodgement. It's when there is a change in your dependence. And maybe when you start, you are a single person. And then you get a partner, you declare that partner if he or she is not working. And when you have children, you declare them. So it will reduce your tax. So this form, we call it as S3. They are all available on the tables. I believe you already collected. That's one of the important forms when you are starting employment, when you commence employment. It will determine the tax-free threshold and the rebate of tax on the salary and wages. So you might be asking, what's the dependence declaration for? Or who am I going to declare? Your dependents will include your spouse, who is unemployed, children under 16, or student. They are attending school under 25 years, inclusive of adopted and your stepchildren. And your parents, father and mother-in-law, living under the same roof. You'll be like you are working in Mosby and your parents are in Ley. When you declare them as your dependents, it will not be considered because they are not living with you. As long as they are living with you under the same roof, they will be treated as your dependents. And invalid relatives approved by a public medical officer. Salary is calculated according to non-resident and resident status of the person, duration of his or her stay in PNG, and the consideration of double tax agreement with other countries. For resident taxpayers, dependence declaration is vital because it determines the salary and wages tax. The residents and non-residents, we have experts working in Papua New Guinea. They are non-citizens, but if they stay for more than 6 months, they will be taxed as a resident. But if they work for 3 months and go back overseas, they will be taxed as a non-resident, and it will be much higher. So it's not it's two different things: non-citizen and non-resident. You are holding on to those green tax. That is the latest tax rate that came into effect as of the 1st of June this year, and it's valid till the 31st of December 2022. The tax-free threshold for salary wages has been increased from 12,500 to 17,500. That's a very big jump compared to the previous years. The tax changes were maybe after 5 or 6 years there was a change, but this change came about after 2 years, because the previous change was in 2019, and then this year 2022 the threshold went up to 17,500. When we say the threshold went up, that means when the threshold increases, the tax rate comes down. So previously, those who were earning 12,500 per annum, they were not paying any tax. Your salary is tax-free. But now it's 17,500. So you divide 17,500 into 26 fortnights, somewhere around 687 or 83 kina. If you are earning that on a fortnight, there's no tax on it. So it's a very big improvement. I believe all the taxpayers are affected by salary wages tax. So on that table, there are 3 parts. We have table A, and then table B, and table C. Table A, the salary is from 0 up to 673. So in the old rate making reference to 2019 tax rate, someone who was earning 673 kina per fortnight was paying tax of 40 kina 60. Under the new rate, there's no tax. So you can see the difference there. Table B, where it starts from 674 to 900, with 3 dependents, the old rate, 65 kina, 45 toya was the tax. After the change, the tax went down to 37 kina, 95. So it increases your net. Table C, salary of 1,200 with 3 dependents. The old rate, 150 kina 30. New rate, it's 108 kina. So we will go through that table C in detail. That's a snapshot of the tax table that you are holding on to. So when I said table B, applicable from 1st June 2022 to 31st December 2022, then you have a column 1 where it says salary per fortnight. Everyone on the same page? Everyone with me? Okay. So exceeding 827, but not exceeding 829. And then you have column 2, that's for non-resident taxpayers. You can see the text. Column 3 is where no declaration is lodged. We will come to that when we go through the employee obligation. Column 4 is where a declaration is lodged. You have completed a dependence declaration. If you are single, you have no dependents, there's a column, none. There's a text there, 1 dependent, 2, 3 or more. So you can see the taxes are already worked out. You just go to the table and get the text from there. So you pay the correct tax. As the tax office says, nothing more, nothing less. So in our example, the table C, it's column 1, non-resident taxpayers. Column 2, if you don't lodge a declaration. And column 3 is where we will be looking at the example, where fortnightly income exceeds 900 kina. The explanation says 58.38 plus 30 toya for each 1 kina, by which the fortnightly salary exceeds 900 kina. Simply, whatever is over 900 kina, you will reduce it by 900 kina. Whatever is remaining, you multiply it by 30 toya for each 1 kina, and then you add the tax on the 900 kina, which is 58.38. So using the table, table C, you can see the tax calculation. Fortnightly salary of 1,200 kina. This particular person is earning 1,200 kina with 3 dependents. So as per the table, column 3, where the fortnightly income exceeds 900 kina, you see the next bracket. It says where fortnightly income exceeds 1,269 kina. Since our fortnight salary is 1,200, we will use the first bracket or the second bracket. Sorry? First bracket, where it says fortnightly income exceeds 900 kina, because our salary is 1,200. So what it simply says, from the 1,200, you minus the 900 kina. That you see the fonts in blue font. It's saying tax of 58.38. That's the tax on the 900 kina. So we are reducing it by 900. 300 kina is the remaining amount. So to get the tax, times 30 toya for each 1 kina. So 300 times 0.3031, 2 dependents, 28.85, 3 or more dependents, 40 kina 38. So you reduce it by 40 kina 38, that's the dependent rebate. So the final tax will be 108 kina. That will be the tax on a fortnight salary of 1,200 kina for a person who has 3 dependents. Everyone clear? We'll proceed. Fortnightly tax schedule, the tax schedule that you are holding on to, must always be used to calculate the correct salary and wages tax for different periods of salary or wages payments. Example, monthly, we went through a fortnightly calculation. Monthly, some people are paid on a monthly basis. Others, weekly. When you are starting up your business, maybe for a start, you will engage them and just pay them a weekly salary. And then he will say, the taxes are in fortnight, so I will not deduct any tax. But as far as we are concerned, you are required to deduct the tax. So how do we calculate a weekly tax? Going back to our example, TI earns 400 kina per week, and he has 2 dependents. So fortnight, now this is a weekly salary. So we'll make it into a fortnight, because our tax table is done on a fortnightly basis. So simply there's 2 weeks in a fortnight, multiply by 2, we come up with 800 kina. 800 kina will be the fortnight salary. Going back to the tax table, where the 800 kina range is, you will see that the tax will be 21 kina, 28 toya. That's for a fortnight. So we are trying to get a tax for a week. We just divide again by the 2 weeks, and the weekly tax of on 400 kina will be 10 kina, 64 toya. I'm straight, huh? So it's not very, very hard. It's very simple. If you follow and go through that tax schedule, there's no need to engage a tax agent. When you're running a business, you can work out the taxes there. Just go to the correct column, the income range, get the tax there. That's it. Final tax. Then you pay someone on a monthly basis. BRT earns 3,000 kina per month and has 3 dependents. Here, this is for a month. So this is for a 30-day month because we have 30 days, 31 days, and 128 and 29. So we divide the 3,000 kina by 30 days. So it will be 100 kina for a day times 14 days in a fortnight. We come up with 1,400 kina. That will be the weekly salary or fortnight? Fortnight. Yes, you are following. 1,400 is the tax on a fortnightly basis. Going back to table C. Table C, we will go to that table C. Okay, under table C, column 3, we have where fortnightly income exceeds 900 kina. Okay, this one, the salary is more than 900 kina. It's more than 1,269, but it's less than 2,693. I'm reading down the column, the left column, column 3 and downwards. So one highlighted in yellow, that's the first bracket. Second is 1,269, and the third bracket, 2,692. So our fortnight salary is 1,400. After going through the calculation, the tax will be 174 kina, 55 toya. That is the tax for the first, how many days? 30 or 14? Yes, 14 days. So another 43 toya on that 3,000 kina monthly salary. Simple lah. Salary or wages or allowance that accrued for the employee must be spread over the period that they will end and taxed accordingly. During the fortnight or the month or the week, when someone is working, he might work overtime, she might work overtime, do higher duty allowance, and receive that allowance, back pay, bonus, or gratuity. All those accrued payments, they will be spread over the 26 fortnights. So this is another example on tax calculation on a HDA, higher duty allowance. Here, the normal salary, someone with a normal salary with 3 dependents of 800 kina. As per our examples, the previous examples, the tax on 800 kina is 18 kina, 45 toya. So we are trying to get the tax for the allowance, higher duty allowance of 400 kina. So the tax, we are not sure. Please don't go to the table and get the tax on that 400 and come and write it down. No. He's going to be paid the 800 kina, the normal salary, plus the HDA. So the total salary will be 1,000 kina, 1,200 kina. So the HDA of 400 kina for the 2 fortnights in that month, we divide by 2 fortnights because it was end. When you do overtime or when you work on a higher duty, you will not be paid that coming fortnight, but it will be accrued and then you will be paid later, maybe the following month. So you go and get some dinner and wait. Following month, you back that. So the tax on the 1,000 kina, so we divide that 400 kina into 2 fortnights. So HDA for the first fortnight was 200 kina. So our new taxable gross will be 200 kina plus the 800 kina, the normal salary, and we have 1,000 kina as the new taxable gross. According to the tax table, tax on 1,000 kina with 3 dependents, it will be 48 kina. So you minus the tax on the 800 kina, 18 kina 45. The difference will be 29 kina 55. That's for 1 fortnight. That's the tax on the HDA of 200 kina. So times 2 because it's 400. 2 plus 29 kina 55. So it will be 59 kina 10 toya. That's the total tax on the higher duty allowance of 400 kina. So when you receive that pay, you are not getting 400 kina only, but you also getting your normal salary of 800 kina. So we add the tax on the 800 kina, total tax will be 77 kina 55 toya. You can see the difference. Then on a bonus. When your business is, as I said earlier, rising to a new level, you are very happy with your employees, you try to give them a bonus. Where back payments such as a bonus is received and not representing any specific period of time, it must be apportioned or spread out over the number of fortnights which that service was performed. But it should not be more than a year or more than 26 fortnights. Like when the year is over, a company declares the profit, they are happy, they give a bonus. And that bonus, they say it covers the previous year, whole year. Then it will be 26 fortnights for us to work out the tax. Tax on advance salary or wages payments are calculated according to the number of fortnights the employee takes. For example, the employee may be taxed according to the type of leave he or she takes. So annual leave, that's fortnightly tax times 1.5. That's 3 weeks. You go on a 3 weeks leave, your leave pay will be taxed on 1.5 fortnight. That's 1 fortnight and 1 week. Recreational leave, that's 3 fortnights, 6 weeks. You go on your long service leave, 13 fortnights, because you will be on leave for 6 months. I'm clear. Thank you. For those entitlements that are not being used for the original purpose, they will attract marginal tax rate on the amounts. So this will include leave credits, leave fares. In some organizations, when the employees they go on leave, when they are not from they go back to their original place, then they are given a leave fare. The company, the department, or whoever, they pay the employees leave first and they go to their province just to take a break. However, if you don't use it for the purpose that it is originated for, then you will be taxed on that allowance. Let's see this example. Someone has a leave fare of 5,600 kina. And total blow, buying ticket, na go place, looking place na, come back. Instead of going out, he decides to cash it. So that 5,600, it's for the year. So it is spread over the 26 fortnights. Divide by 26, you come up with 215 kina, 38 toya. You must always remember that this person, his normal salary, he or her normal salary. In this case, the normal salary is 900 kina per fortnight with 3 dependents. So you add the answer of that leave fare of 5,600 kina divided by 26, which is 215 kina 38 to the 900 kina. So your new taxable gross will be 1,115 kina 38 toya. So you calculate the tax on that new gross. We will not go anywhere. We will go back to the tax table, that green paper you are holding on to. Go to table C, column 3, and that we will use the first bracket because it's more than 900 kina, but less than 1,269. After going through that calculation, the tax on the new gross will be 82 kina, 61 toya. And then you minus the tax on the normal fortnight salary of 900 kina with 3 dependents, 37 kina, 95. It's already on the tax table. So the difference of tax, the 82.61 and 37.95 is 44 kina, 66 toya. So that's for one fortnight times the 26 fortnights. The total tax on the leave fare that is cashed in by an employee of 5,600 will be 1,161 kina, 16 toya. That will be the tax. Otherwise, if you go to the column 3, the table C, and then work out by going through that bracket where it says more than 5,600, you will come up with a very big tax, and that is wrong. So this is how the tax will be calculated. Shall we proceed? Am I right? Okay, calculation of termination, resignation, or retirement payment. As far as the tax office is concerned, when you go out from your employment, you are leaving the office. It's like you're terminated or your resignation pay. So you will be getting that pay. Prior to 1/1/1993, all termination benefits were taxed at 2%. I believe those of us who are salary wages earners here, some were started after this date. Maybe a few are only attracting that. After 1/1/93, the termination benefit or the entitlements, the tax, that marginal tax rate spread over 26 fortnights. So the first, before the 1/1/93, it was 2%. Regardless of whatever the amount was incurred, it's taxed at 2%. After that date, it's spread over 26 fortnights. We go to the tax table again and then determine the tax. Only long service leave attracts concessional rates depending on the number of years of service. Because of that 1/1/93, most of them have already left employment. So the government came up with this, encouraging the workers to continue working, continuous employment. So this is how the tax will come into play. If you are working for less than 5 years, when you leave employment after 5 years, your tax will be taken at the marginal tax rate, meaning that it will be spread over how many fortnights? 26. More than 5 years, but less than 9 years, will be 15%. More than 9 years, but less than 15 years, will be 8%. However, if you work for more than 15 years, your tax will be at 2%. So those of you who are now 13 years, 2 more years, then you go to the 2% tax relief. Let's look at an example. Total payout of 10,000 kina. This fellow has decided to leave employment. Over the course of his employment, salary was 700 kina. So the amount that was incurred prior to 1/1/93 was 2,200 kina. 2,200 kina is coming out from that total 10,000 payout. So that 10,000 lump sum is made up of two components. First component of 2,200 kina was incurred prior to 1/1/93. So that amount will be taxed at 2%. Whatever that was incurred after that date, after 1/1/93, 7,800 will be taxed at the marginal rate. So divide by 26 fortnights, we have a 300 kina. Salary is 700 kina, so it will be a total of 1,000 kina because we went through examples on that 1,000 kina. We are using that same figure so that we will all be on the same page. So the tax on that 1,000 kina with 3 dependents is 48 kina. You deduct the tax on that 700 kina, the normal salary. And tax on that 700 kina according to the new rate is 41 toya. If you are earning 700 kina, your tax will be. Sorry about that. So when you are earning like referring to the new tax change, if you are earning 700 kina on a fortnight, your tax is only 41 toya. So you have more money to do your shopping. So that tax on 1,000 kina of 48 minus the tax on 700 kina is 41 toya. So the difference will be 47. Sorry, this is beyond our control, so we'll blame it on our IT guys there. The difference is 47.59 times the 26 fortnights, total of 1,237 kina, 34 toya. That's the tax on 7,800. The payout is 10,000. So we also get the tax on the 2,200, which is 44 kina. That's 2%. So if you work for more than 15 years, that's it. The tax will be around that figure. So the total tax on 10,000 kina payout is 1,281 kina, 34 toy. You guys happy? Don't blame the system, but whatever the information is coming out. All right, huh? Okay, now we got another step up. The total payout is 32,000 kina to an employee. Salary is 800 kina. Length of employment 24 years. So I'm going past 15 years, so it's okay because it's gonna attract the concessional rate. Okay, the 32,000 is made up of. This is something the HR will do. Your accrued leave in this example, accrued rec leave is 2,400. Ex gratia payment is 8,000. Payment in lieu of notice 4,800. Total of 15,200 kina. It will be taxed at the marginal rate, and then the one in red, accrued long service leave, 21 fortnights, a total of 16,800. It will be taxed at the concessional rate of 2%. So that all those figures make up the total payout of 32,000. So we go back to that 15,200, the amount that was accrued. It will be taxed at the marginal rate. So marginal rate, when we say marginal rate, we mean spread it over 26 fortnights. So 15,200 spread over 26 fortnights, total is 584.61. You add the normal salary of 800 kina. The new gross will be 1,384.61. Tax on that amount, 169 kina, 16 toya. And you deduct the tax on the 800 kina, which is 18 kina 45. So the difference will be 150 kina 71 times 26 fortnights. The tax on the 15,200 will be 3,918 kina 46 toya. And for the portion that was that attracted the concessional rate, which is 16,800, simply, we will not go over the long calculation. It's concessional rate of 2%. So times 2% is 336 kina. So you add that up with the 3,918 kina 46. The total tax on a finished pay of 32,000 is 4,254 kina 46 toya. Moraita. Any questions? The money that was taxed is only about 4,000. So the difference, about 27,000, will be your net. We'll there are a few more slides there. We'll finish that, and then if you have questions, you will ask.
Probably while waiting, you may time am run, so while our friends are trying to get the presentation up and running again, we'll take a few questions, and when it comes back on, we will go back and proceed with the presentation. So we'll take one or two questions in the meanwhile. Sampla ask him. Online blue lo backside straight in presentation blue stop. So we have one from the back, from our Mr. Molina Samuel from BSP. You take it first. You go first. Yes.
Okay, thank you, IRC. Basically, this is not a question; it's just a comment with regards to the calculations. All make sense; they're very clear. But just to add on, maybe if IRC can take this on board to collaborate with the other stakeholders, such as our labor department and so on, to understand, and Bank of Papua New Guinea to understand the inflation with regards to the current rates that you guys are using, that is affecting the take home pay for wages, salary, and us. So currently the inflation in the country is quite bad, and I guess it will only come back to our people that are looking after these key areas to work with IRC, so you can come up with the I guess better amounts to be calculated, because right now with the current inflation and the current crisis of the nation, as per the calculations, they are okay. It's very clear, it's simple, but the take home pay is not sufficient enough for. So I guess it's a comment for you guys to take on board, to maybe have discussions with the current other departments of this nation. You can come up one time some good pla. Ting ting lo, how lo, putimul good pla. I guess kisim 10 to kind of it's the kind of all time.
Um, sorry. Yeah. Just trying to acknowledge his Walalian.
Thank you.
Oh, okay.
Uh,
I
I've got one question here regarding salary and wage declaration. I work with education department. I joined the department in 2016 and 2018 I married. I've got a couple of kids. I launched this form couple of times and I didn't get any feedback. That declaration form here. I don't know. Bamingolo said again now. How will I going to Bamikarim Golo said again? Mikarim Golo HR blow me all film all sign. Mikarim come down launching to blood time na nogat one him come up so still me by him this la takes time me been one him single yet. It's more than me film was implanted through because inflation is going up and I cannot afford the dependence. Thank you.
Thank you, brother, for that concern. The history, we will go through it in detail when we go through the employee and employer obligations. Just going back to our first speaker, our brother from BSP, that's a very good comment. We also, the tax officers, are just like you who are salary wage earners here. We are all paying the same tax. The higher we earn, the higher tax we pay. There's no exception for tax officers. We are all taxed at the same rates, and we are all contributing to the nation building. But yeah, fair enough. If taxes are lowered, everyone will be happy, as well as the tax office.
we, and just for clarification, as an organization, the IRC only administers. We can take, yes, at the higher level, they only give advice. But to make decisions or decide which amount to pay, we don't do that. We only administer. So the Treasury and online blame all parliamentarians, blame through the NEC, they make the decision. So we vote the right leaders in, they make. But I think we can appreciate the recent changes that have come about. Usually it takes 5 to how many years to make changes? Changes with the government, they're only recent. 2 years or so, no anything from 10,500 to 12,500. Now Guantaplo, 17,500, and I think they've already somewhat passed to 20,000, but we are yet, I'm stop yet, you may make him this lesson. So, some time you may talk, but appreciate that fact that changes are happening. All the time on come up, one time that's all. Thank you. And we did not get back to our friend from the education department with the, did you? Okay, the salary wage declaration form, once you complete them, it goes back to your respective HR from wherever you come. So like for the case of our friend, online blong payroll blow education were the ones that were supposed to all effect him for you to see that change and not IRC. We only collect after they deduct. They do the necessary changes, take on board your dependents, tax you accordingly, and pay the tax to us. I'm clear. Thank you. Okay.
Thank you. I think this will be my last question for the day. When I'm Sambla provincia, I appreciate presentation because I was asking my one talk on my side, me to kusat pa ko gidis la calculation ya. Na me understand mo sa business owner or government or, but the rate is still the same. I am trying to imagine the trade free economic free trade zone that is going to my province. You may look him this laya me by he got so sorry, it's unnecessary. But me like look him how by you may got some la plan lo this lakain.
Your question, I don't think we'll be in a position to answer that question for you. Your questions, please make it in relation to Terence's presentation on salary and wage. Plenty blolis lol kami and blolara lol stakeholders and not for the IRC. So please ask your questions around what the presenter has presented. So mi go straight lo dislan answer. Someone a question lo here. T, or would you like to present without the you talk that's all? We'll take the last question.
Thank you, Terence. Uh, good representation you okay because Bibla kata samla Bibla start MP man penis lo lilik bisis Bibla start payment man tu. Na Bibla sa foul making calculation lo payment tax. But time me ben you come start me ben you good come na tintin block boy come up no me forget na me start now. Na me ben you come more. So me asking you, you are copy the formula you show me you got copy stop or you got the text calculator stop or you got on the formulas long spreadsheet Excel spreadsheet stop by me like na. You can give me the volume na ba me like use him long. Manage all business no la no kat.
All those information are on our IRC website. So you visit our IRC website and you can download whatever form that you are after, as well as the tax calculator. Everything is already automated on the tax calculator. You just enter the fortnight salary and the tax is already calculated. And if you want to confirm that, because it's computer is not a person. They don't have emotions. So you check against that tax table, do your own manual calculation, and you see. If you confirm that they correspond, then that's the correct tax.
Thank you, but a very genuine point there, and we must also admit the fact that yes, our tax calculator is setting for 2012, and work is in progress to update it, at least to cater for the current changes that are happening. But calculator, I'm calculator. Big plus something, you know how to do it now. Me plus show him you are. I'm not a plus something too. So with or without the calculator, but yes, it'll be very good if IRC can convert all of this and factor that into a calculator and make him easy lo your plateau. There's one from the back. We'll take one from the back, one question.
So let me just bring really thinking kind of some got this la tax relief, yeah. Lo certain salary level up, maybe 637 kina na come down no same. All relief lo tax. When you see a lot of companies now, especially all Chinese company na some company, all pay below, yeah. Now all no puglo put him tax blow. Monthly salary tax return blow. So with the one you got some threshold, not threshold, but they got time frame. When will these people be on that salary scale until Oglon Alba scale? Because that's how you lose money stuff. Yeah. So that's just my comment to IRC law. Take note. Okay, one plan. Now plan on average salary income, yeah, they're about almost 40% all pay all income. Now when you look at it, you look at some Molina talk law. Inflation. Inflation is about 8 to almost 10% now. So that's when you add in, it goes almost 56%. Plus GST, all pay, you look at it, I'm adding almost 66%. So you look at tax work like kill him all man. So how do we as IRC how do we help come up with them some platform help him all citizen blame? Of course, tax is important. We are going to pay. But how do we relieve them all online blame? Those who are working hard, especially this 300,000 man Mary. Now that you may relieve him what I mean, now I'm come down to 200,000 now. Those who are fully engaged to pay more tax here. And because of 200,000, now almost 80% of the population all contribute. That's why we have people man working, people stress out there paying tax. So as a regulator and as a custodian of those yeah, how do you play your part to help this country? Thank you.
For your question, we have our Commissioner for Services there. She'll answer your question. Give her.
Good afternoon, everyone. Thank you. Good plan. Me sit down and have all questions. Thank you. Just to answer our friend here's questions on CPI and what the government is doing. One of the measures the government did was increase the tax-free threshold, like Terence Walker explaining stuff here, from 12,500 and passing law this year, law increasing go law 17,500. Law addressing CPI, yeah? Not apply. There's some GST measures for fuel, consumption of fuel or passing law this year as well too. I think Treasurer too some announcement or some they're continuing to look at some relief measures around GST law, reducing some cost of basic household goods. So this plan is still under discussion. So me plus IRC, me plus work one time Treasury law, supporting more law, all kind measures, all Treasurer and all line blame, got tintin law, reducing all taxes or addressing CPI. So whatever decision on working law, Treasury in a Parliament, like we implement it. So what we are currently implementing is the 17,500 salary and wage threshold. Yeah. I understand that some employers haven't implemented it yet, but most of the employers in the private sector have also implemented this, but others may also not implement it. So that's where we are. Thank you.
Thank you, Commissioner for Services, Ms. Bray, for answering that question. Again, please, your questions around what he has presented. Now, anything outside, please limit him. Limit him past time. Yes, we point taken. We limit it to the presentation when walking lem. So, lo legally business blue that you are currently operating now. How about you walking this law calculation? You missed upload this plan. We'll still take 1-2 more questions. Me some confirmation long line blue me.
Me putting money go on top na not money looks me. Thank you, sir, for your presentation. That's more understandable. Me like asking one of the question that's all. It's not a question, but it's a concern. Okay, they gonna pay. They gonna pay. Okay, how by me like giving relief, or me like as a legal or businessman Marianne and Kanya. Okay, we will pay our all employee blah. Okay. Time we play rousing pain and we play paying tax, giving money long all. Okay. We play rousing tax. Time we go front up long Chinese store, supermarket or whatever. Only rousing money can long GST long, same pay packet. How do you address that? Long give him relief long or legal man Mary only walk long or some like him legal business long mibla. How do you give relief to that? Because we are double taxing here on a same pay packet. We remove it from the pay packet, and at the same time we are removing from the shopping basket. Thank you.
I don't mean to sound rude. That's the same thing our commissioners just explained. Around your concern that salary wage is being taxed, GST to one kind. So it's not that the government and the IRC the 6 months now will increase him go 17,500. What more do we want? That's the way the government collects its revenue from. There is discussions in the GST space that if we can make GST the number one revenue tax in terms of revenue collections, then maybe dropping all get come down salary wage, so that you get your money, you go to the shops, you pay, and we collect through GST. So this la kind of thinking, na this la kind of senis na discussion, emi stop. Na mi pla thank you lo one bell blow you pla, a citizens even mi pla too. Na you mi pelisin allow him. Government blame me lo, walk him this law senis, come up isi na go. Present lo morning talk lo income tax. CIT, yeah. You me yet you mean walk lo by right amount of taxes stuff, yeah, which we are trying to educate you on that. So as long as you do the right thing, the government collects the right amount, no loan, reduce salary wage, pay just the GST, we collect the GST, make enough revenue. So it's that cycle. So please, we pay attention again to the responses that people are giving pennies, otherwise people are repeating people yet. But I'm all right. One bell stop for the occasion. So people come, people la clear him, people all get a misunderstand him. I'm not sure how. I think the technical glitch has been sorted out, so you can try turn on the banner and we proceed with the final.
Okay, after you leave employment, you will front up at the number one super office, and then you get your superannuation payout. The portion or a component that will be taxed will be the employer contribution. Every fortnight, when your number one super it comes out from your pay, your employer also pays a portion, and it's not taxed. At the time of getting that payout, that component will be taxed, not the whole contribution, but the employer contribution. So the employee contribution will be nil tax, and it will only apply on the employer's contribution and any other interest that was accrued on that total contribution. So that's how the tax is calculated on the superannuation payout. If your contribution is less than 5 years, it will be taxed at the marginal tax rate. More than 5 and less than 9 years, it will be 15%. More than 9 years and less than 15 years, 8%. More than 15 years, it will be 2%. I believe that brings us to the end of the salary wage presentation. I believe your questions have already been answered. We will still be around. You can also visit us. We have other tax salary wage experts among us coming from the regional offices as well as the head office. So feel free to visit them and ask them on this salary wage rates and group employers obligation. First and foremost, deduct salary wages tax from the employees whose salary wages are above the tax-free threshold. If you are giving them a salary and the salary does not attract any tax, when you fill in the tax remittance form, indicate as nil. As long as you comply with your lodgements. Don't think that there's no tax being taken out, I will not fill in a form. You have to be compliant with your lodgements. When you take out the tax, it has to be remitted every month before or by the 7th day of the following month. When you take out the tax for January, you pay it in February, by February 7. And as a group employer, you are required to issue statement of earnings to your employees. Statement of earnings shows how much you have earned during the course of the previous year and how much tax you paid. It's just like a summary. And you lodge a reconciliation statement annually. We will go through them, those forms in detail. Total amount of salary wages tax deducted in each month must be recorded in the S2 form. Did you collect the S2 form from the table? If you have them, we'll IT the S2 form. It's a remittance by a group employer, and you send it before or by the 7th day of the following month. All details on the remittance advice should be completed. And if salary or wages tax has not been deducted, as I mentioned earlier, on the remittance you write nil and send it to the tax office so it updates your lodgements on salary wages tax. A statement of earning. Statement of earning is labeled as S1. It's a statement of earning and it must be issued at the end of every year, not later than 14th of January the following year. So by next year, 2023 January, you get your statement of earning for 2022 from January to December on one single paper. And we refer to that as the S1 form. For any employee, when they leave employment, that's the form that will be issued. So you have the name of the first thing will be the TIN number, the TIN number of the company, your small business or your company. That's where you code down the TIN, name of the employer, your contact representative. You must put the phone number, reliable contact, and the statement of earning for the period from 1st January to 31st December. You write the year, 2019, 20, but it should be for 1 year. And the name and address of the employee. Our employee here is Mr. Reitman. And he, over the course of that 2019, the total gross salary was 13,000, and the salary that was paid, the salary wages tax that was paid, about 21 kina 6 toya. So that's the summary showing for one of your employees only, one single employee. That's his summary. So a remittance advice form, that's the S2 form. It must be submitted with the salary and wages tax payment, giving details of wages paid to each employee and the deductions made. Again, if there's been no salary wages tax deductions, that form must always be completed. You indicate as nil. So this is how the S2 form looks like. It's a remittance by group employer. You write the TIN of the company or business name of the taxpayer, your address, and then the installment deductions. It's for the month of December, year 2019. Number of employees on payroll at that time were about 5 people working, and the total salary and wages that was paid to the 6 employees is about 6,000 kina. And the number of employees for whom the salary wage tax was deducted out from the 6, 3 of them, their salary went over the tax threshold, so they were taxed. So that from that 6,000 kina, the total salary and wages paid to employees for whom SWT deductions were made is about 4,500, and the tax on that 4,500 is 256 kina, 42 toya. That's the tax for the month of December, 1 month. So from the 6, their payroll, they have about 6 people working, but from the 6, only 3 people's salary went over the tax threshold, so they were taxed. And the tax that was paid is the figure that we saw. So I'm clear. That's how you fill out the form. And then you remit to the tax office with the amount before the 7th day of the following month. And then your tax lodgements will be up to date. At the end of the year, then you are required to complete a reconciliation statement, a group employer reconciliation statement. It's referred to as the S6 form. It must be completed and enclosed with the IRC copies of statement of earnings when they are returned to the IRC before the 14th of February the following year. This is now the reconciliation. The S2 form is for every month. The S6, that's the reconciliation for that year. So this is how the form looks like. As always, your team must be indicated, the company name, context, and then deduction period. It's from January to December 2019. So on this reconciliation, you will see January, that was how much salary wages tax was deducted. 256.42. February, March, it went up. April, May, June, July, August, coming down to December, the total salary and wages tax paid was about 3,333 kina, 46 toya. So it comes together with copies of the statement of earnings to the tax office. So it's our SWT officers, they reconcile whatever that was paid during the month, so it balances up. It's just like reporting. You've already done the hard part, which is every month you deduct the tax, you remit. This is at the end of the year, the following year, you are reporting. Am I right? As always, group employer penalties. As a group employer, you are running a business. And you are also obliged to go in line with the tax requirements. If you do something wrong, you will be penalized, just like playing sports. When you do an illegal tackle, you are penalized. So here, group employer who does not remit tax to the IRC on time may be liable to a penalty of 20% flat on the outstanding tax, plus 20% per annum of the daily penalty of the amount that remains unpaid. Let's look at an example. I'm from the big village. That's why Mauro Limited deducted 1,000 kina from its employees' wages in March. The tax amount should be remitted to IRC by the 7th day of the following month, which is 7th of. So the total penalty will be 214 kina, 46 toya. If you follow the tax laws, then you will lodge them by the before or by the 7th day of the following month. So if you would have followed, it would have been only 1,000 kina. But the company name is Mauro, but they did the wrong thing. So it was penalized an additional of 214 kina. So we don't want that to happen. That's why we are here. We are trying to educate you from the smallest to the biggest business. Follow the right thing, so IRC will get the correct tax, and you pay your fair share of tax. The group employer who fails to remit its employee salary or wages tax can be fined or face imprisonment. To avoid the penalties, employers should put aside salary or wages tax deductions and not use the money for any other purposes. Every month, when the business is operating and on a fortnightly basis, you pay the employees and you deduct the tax. That's the employees' tax. and tax blow workman, you buy finish. That's their tax. So you don't have to hold on to it. You remit it to the IRC. I'm clear. Otherwise, you add on another 214 kina if it's a 1,000 kina tax. Lastly, our dependence declaration form. As employees, if you are employed by a small business or you have employees, every time when they commence employment, you give them a dependence declaration form. It's called S3. Employees should complete a declaration form and give it to the employer in order to benefit from the dependent rebates. A declaration can only be submitted to one employer. If there are multiple employers, then a declaration will be lodged with the main employer. It's like you are working on a full-time job, so you lodge your declaration there, your permanent employment. In the evening, when you go home, you go and look after your brother's maybe fuel station. So you go and you just do some overtime work. You are not required to lodge a declaration there. That's not your main employer. You will only be allowed to lodge a declaration in your main employer only. I'm straight. So if you are doing side work, it will be fully taxed. You are earning more income. The more you earn, the more tax you pay. A new declaration should be lodged or submitted with the employer when, first and foremost, when you start employment, the companies will tell them you go and open a bank account. So your first pay will go to that account. You go to number one super, go to the hospital and get a medical clearance. One of the most important forms is the salary wages dependence declaration. That's the form that as a group employer, you have to get and give it to your employees so that the tax goes in line. The next time that you lodge a declaration is when there is a change in the number of dependents. It's not an annual lodgement and it's not a fortnightly because we don't get dependents every year or every fortnight. It will be after several years. Or if you stop maintaining a dependent, this dependent of yours now has graduated, now has new employment, he will now have his own dependents. Or Pikini Bloyu, and go married, he or she will have his or her own family. So they will not be regarded as your dependent. They've made a choice to look after themselves, so they will not be dependent on you. So this is the S3 form. Always put your company, the employer TIN. That's the TIN. Name of taxpayer. Any other contact representative in your small business, the payroll area or human resource. Put a reliable email address. Your residential postal address. Type of work you do. In this case, office administration. Name of employer, Heradai Limited. Address. Is this a full-time or part-time job? It's indicated as full-time. Do you work for another employer? No. And the period of employment from the 28th April 2021 to that end date is not mandatory. As long if it's a contract, then we have a certain date. But if it's just a formal employment, well, the employment will come. The cease time will come maybe after 5 or 6 years time. So there will be it's not necessary. So when you go to the next page of the S3 form, you have the page where you have to declare your dependents. So the name of the spouse, full name, date of birth, Last column says, is dependent wholly maintained by you at present? Yes. Then that means the spouse, Kekeni, is not working, unemployed. So the husband is claiming, and the two children under 16 years, and one student children under age of between 16 to 25. So total of 4 dependents. When you see that dependence declaration is completed in that manner, then it shows that you as the group employer, you get that form, then you action it right away. If they are declaring 3 dependents, you go to the tax table, see how much you are going to pay them, see the dependents, and then take out the tax. It will be the correct tax because it's coming from the tax rates. You must always make sure that it must be signed by the employee and witnessed by the employer, the rep. That little statement there, a maximum penalty for false declaration is 10,000 kina or 6 months imprisonment. So if you don't want to that last statement to apply, then do the right thing. You declare your dependence. Don't. If you are single and you try to avoid get some tax benefit and you write down fake names and try to increase your number of dependents, that last statement is not good, not friendly to us. So you don't want to end up in the prison or 10,000 fine. Everyone needs money to run business. Because of that one silly mistake, your 10,000 kina is down the drain. So we have to do the right thing. That is the form that we must complete. Okay, once a tax declaration has been submitted, you are now in your business and your employee has submitted the S3 form claiming for the dependents. You check the names of the dependents and then you action it. A new declaration may not be used to recalculate the tax for the fortnights that have already passed. I had a question from one of our friends there. He works with the Department of Education. He lodged a dependence declaration and nothing has changed on his. When you come to the tax office and try to claim for overtax, one of the main documents that we will ask for is the copy of the declaration form that you lodged, the S3 form. If the copy is not there, if it's a new one and it's approved, it will only be applicable going forward, not going back. It will not be backdated to how many fortnights that you missed out. Maybe it's because it's one of the employer's obligation that they have to do the right thing. If they don't do the right thing, then they will the person at the other end, which is the employee, will be affected because he will be paying higher tax because of that S3 form not actioned. The only time the S3 form comes to the tax office is on that form. You see there's a next table. It says a class of dependent. So if you are claiming for your parents or your brother or sister or your sibling is born with a disability and you want to claim them, if you are a group employer and you find that form, you send that form to the tax office for us to give the approval. But if they are claiming for the immediate family, the spouse and the children, you action it right away and deduct the tax accordingly. But if they are claiming for the second class dependents, which is the parents and the siblings, you send it to, or if they are claiming for the whole tribe, send it to the tax office and we will try to see if they are genuine. That brings us to the end of the presentation on salary, wages, tax, and also group and group employer obligations. Any questions?
We'll take 3 questions for the afternoon and we will conclude.
Thank you, IRC. Me, Colin Employee Finis. Me, Francis Mangam, Employee Yalibu. Me, Kamlo Avsik Tasol, I think you want to opportunity. And me looking through the Pepana, me Kamlo Desla Forum. Now, me like asking you, you look at me, I'm all plan man. Me woglo Bougainville Copa, me no kiss him return. Tax returns, me no kiss him. Number one. You blah IRC got good blah lo welo. Give him all regot blongen lo look lo. Des blah kind of mino sawe. Now me des la talk forum blo me puli me go all kata lo arawa. Now me look him des la na me ask him you des la question. Number 2 question blo me yet. Puli me go back lo Southern Islands. And me woglo LNG project. Me no kiss him tax returns. Sambla year or Arbla year or something me go supervise him or work long hablo LG project. Namino kisim tax returns. IRC you got well or keep him record blow all this la blow me or mino sour tasol me bin tax. We can remember lo pay sleep blow me sour tax lo heavily. Thank you, Tasol.
Thank you for that question. In relation to your statement of earnings, as I mentioned earlier, the group employer, you are required to give statement of earnings to your employees at the end of the year. So you must always issue those documents to your employees for the record. Law side law questionnaire, Papa asked him, those Bougainville and LNG employment days, will you have to visit the officers, our salary wage officers, and then we will. There are certain questions that we'll have to ask and see. It might not apply to everyone. So after all this last session, you can look in plan and by ask him this or something all not giving you. When what is the date and when was that? Because the tax office can keep records for maybe 7 years only. After 7 years, then they are destroyed.
We'll take one from here and another last one.
Good afternoon. My name is Rexina. This is not a question but a comment. Yesterday and today we had a number of presentations, very informative presentations. I would kindly ask Ellen if you could arrange and get a copy of the presentations and email it to us through the registration. I guess everyone provided the email addresses. I would appreciate if you share all those presentations with us. Thank you.
Yeah, that's why when you register, we ask for your email address, your contact details. So the presentations, we will email them to you, to your email address upon your request. Yes, and gentlemen.
Thank you. Question Blumilo, employers contribution. Yeah. You plus a tax employers contribution. So in terms of the whatever all percent rates you will apply, you plus consider him all tax return blow company time and put him annual on returns because as far as Miss Awem, so now you talk, yeah, you plus okay monthly on a salary returns, yeah, all workman. So you put him like percentage now, then all superannuation also apply him blame, yeah. So one of them leverage you plus to look long him. Because planting now will complain also superannuation will also planting money all low tax, yeah.
Thank you for that question. Mainly it's considered according to the number of years you have contributed to that fund. We had those years from 0 to 5 years, it's marginal rate. From 5 to 9 years, 15%. And the list goes down. That's the employer contribution. The employee contribution is not taxed. It's already been taxed when it was paid during that fortnight when you were working. So when the time for payout comes, the employee contribution is not taxed, only the employer contribution.
Blue am law. Me as a company now, me pay law bogman blue me. But time put him one law superannuation blame. Employers contribution I'm going inside now. So you kind of superannuation I'm just tax him. But time will put him annual tax return on some company and put him go you look law some black and all average law apply him so that this laman we're working savings blame stuff blame me is not heavily taxed because company and paying pennies.
So I think you went through the calculation of that prior to taxes for the employees. In the first part of calculation,
Yeah, this is the first presentation blame ask him. Because you know give time the question so me ask him now.
okay, so if we can have that presentation after, so Terence did go through the calculation of how your superannuation will be calculated in the event that you wish to withdraw it. In the event that you wish to withdraw it, the rates will be applied to the employer contribution and not the employee. Employee contribution, as indicated, it's done on a fortnightly basis already. So that is aside, na yumi kisimos and pay me every fortnight already. But the one that goes to the super funds, he did go through in case you missed that information out. So I think we've come to we'll take the last one and we'll conclude for the day, 3:15.
Thank you. Once again, Thomas here. You may look him this la threshold blow all one all pay yes. That 17,500 kina is actually equates to 673 kina per fortnight. Plandi lo mibla sinalo this la room. We are small SME business people, and 673 kina actually am plenty money. That's a lot of money. So plenty law work mibla working. It's on based on families all LP mibla, and also some of the time mibla pay more wages and it's much lower than that one. So asking blame also. So was mibla work lo pay money lo this la 673 kina. Na MM come down. So there is no need for us to pay salary and wages tax equal IRC. Okay, when that happens, what's the requirement? We are still required to load the monthly.
Yes. I went through the S2 form, the monthly remittance. If the payment, like if the employee's salary is below the threshold, there won't be any tax paid or deducted. But you fill in the S2 form, indicate as nil, and cover that month. As long as the pay is below the threshold. If it's over the threshold, yeah, you tax it. But if you don't deduct any tax during a month, I encourage you to fill in the S2 form, indicate as nil, your lodgements will be up to date. Yeah, submit before the 7th of the following month. Am I right? Okay, I'll close up with a short joke. You know, the taxation is a very complex subject, as our CJ mentioned in his address. when we are talking about tax, we as the tax officers are also learning because we are still trying to learn as much as possible regarding taxation. Myself, I've been, it's 15 years now, so that 2% is now applied to me, so I'm happy. Just a few more years and then maybe 1%. Anyway, that subject is very, very complex. So this is the joke. If the subject is very, very complex, we still try to learn as much as possible. So here comes the story. There was one lapun man, and look after one dog. He looked after one dog and he educated that dog. So when time for holiday, that leave pay out here, Pikini man bloem em go live lo place. So I'm carrying Pikini man bloem na tupla go lo place na papaya stop. Sit down underneath the house na em dog to him rang gokam na. That small boy came and his bubu was telling him, "You see my dog? That dog is very very clever." And this little boy was saying, bubu, how? Try ask him a question. So the dog, Pikini bloem em go lo house finish. So early morning he called the son. He called him and he said, "Hey, you ask your son what did he do to the dog?" And the dog did not sleep till morning, and it's still barking. Slafara and Singotim Pikinini and talk. What did you do to the dog? And it's still barking. And he said, "Oh, Bubu said the dog is very, very intelligent and clever, and he was barking the number of the questions that we were asking. It's the dog and Karayosem. Okay, so what did you do?" Pikinini, Mangia and talk. Well, I asked him, 1 million plus 1 million. So this la dog, it's still counting that 1 million. So tax-wise, we still need to learn more, and we will become good taxpayers. So we help our nation, as our slogan says. We are your partner in nation building. We partner together, small business to medium, and we'll build our Papua New Guinea. Thank you very much. God bless you all.
Thank you. Thank you very much. Thank you very much, Terence, for that. You did a very good presentation on salary wage. We say thank you again. Our good participants, we've come to the end of another day of the MSME awareness. Again, I'd like to say, Mitok, thank you. For those our friends that have also joined us virtually too, thank you. But you find even after you go back in, go onto the electronic platforms, LinkedIn, Facebook, all of this is pre-recorded. So suppose sample, explanation, kisim good, you can always go back and go through, but you can follow through. Okay, just a recap. Today in the morning, our good presenter Miss Conio Eli, give you Miss School or how record keeping, the very basic. One something you must keep him. So we went through that. She did a comparison between small business tax records and income tax records. So we hope you took some notes on that, at least some clearing thinking blow you me. After the coffee break in the morning, we sort of went into 3 breakout sessions. Sampla you missed Beklo here, one time director Miss Sismasu, you may go through corporate income tax or CIT. Larapla Olga one time Narapla director from the Highlands region, Mr. Miko Moria. He went through personal income tax. And the other group went to the last room with Miss Ruth James from the Latex Center that came in, and she presented on small business tax. So don't worry if you missed out on the other sessions. Again, they have been recorded, and by the evening when you go, they would have been uploaded already, so you can also have a look through, just in case you think also you miss out on that information. And then after lunch, and now in the afternoon, you may go through the salary wage. And Terence actually go through plenty something. Those information are on, and we have examples that are on the green taxable forms that you have there. So take him time, read through them in the evening. We'll be here till tomorrow and the next day. If you still have questions, again, also we may talk. One time this latu me talk. Thank you, lol. Interaction blow you pla. We apologize if some pla blow back him blow me pla no come straight lo ting blow you me talk sorry. But thank you for interacting with us for the last 2 days so far. I also acknowledge all our other stakeholders that are outside and they're also watching from there. Online Blongimilo, number one super. Our friends from the Institute of Leadership and Governance, PILAG. Online Blongimilo Commerce and Industry, NCDC, BSP and Kinabank, and we also have on Pueblo business consultants acting as a tax agent, so also set up booth outside. You may acknowledge him, all staff want them, you may, and also our good friends, Ilda and Claire, so that people can capture him all audience to that. Again, that would require their services. As much IRC wants to make it inclusive, some you may not can segregate him online where that have other needs too are also catered for in this all awareness that we go through them. So once again, thank you. Tomorrow is another day. Thursday would be the third day of this awareness where Bahimi go through law, GST, all bank accounts and the new platform sort of where people like him, Yumilo Interact One Templem would be the My IRC portal. Financial literacy, and on tomorrow, that day too, we'll have some of our stakeholders that are outside to actually come up and present as well. So one more legal film plats si plakisim lol pini sol by kamna clear him talk lo this la too. So one time this la again me talk thank you for this afternoon, no afternoon tea. Again, we brought the afternoon tea forward, and thank you Lipla having lunch one time during lunchtime. So time this lampinis. Go home safely, and we'll see you all tomorrow. Thank you.